Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning. Welcome to the day after. But don't worry, we're okay. I don't know. I think it's the drugs, but like I just can't stay depressed about it for very long. So feeling good. Rejuvenated our account, put more of our trading money into it, so we're totally fine there. Ready for this non-farms. Now, I'm not necessarily expecting this non-farms to be huge, but they are gearing up to do something, so we'll see. It's going to be very interesting. Let's go to the charts here, just kind of look at what happened overnight. So the S&P 500 took a pretty good jump yesterday, but it didn't completely retrace this COVID decline. Yeah, we had a little bit of a downturn overnight, but it looks like we're recovering that. Okay, Treasuries in the meantime are staying relatively high. I don't know what the deal is, but I think treasuries are relatively high here because this is like pre-COVID. Like, I don't know. It was kind of interesting. Now, oil may actually be a more effective barometer of the economy right now, to be honest. I don't know, but the guys in oil are saying, well, okay, this move was OPEC yesterday. Of course, the reason we had this huge decline was OPEC. It is increasing supply. Some suggesting that this was kind of more of a political move to, that they didn't want to piss off the Biden administration too much. Also, they're saying, this new variant, since it's weaker, not as severe, that actually could be a good thing for risk across the board. So, come over natural gas. It just continues to be somebody in natural gas made a mistake. They were doing this stupid arbitrage thing, and they're getting screwed. Gold and silver continue to languish here, to be honest, and Kappa may be on the upturn. Coming over to cryptocurrencies, Bitcoin. A little, there was some points yesterday where it was declining, but they're doing okay. I would say, I think they're doing okay. Now, and then we got to go to the dollar, which is still relatively strong in the 96 range. But I'd say, after the earlier parts of this week, it's actually kind of been going a little bit sideways. So now for the non-farms today, we have the median estimate of 550K. I'm not necessarily expecting the news to be excessively off. Like, I think that will probably be pretty close to that 550. Like the range of estimates is not nearly as big as it used to be. Okay. But I do think that if there is a risk of like a big move here, it is that the treasuries will sell here. Now that said, they're holding an okay bid, so we'll see what happens. By the time the OPEC hit the news, the wire, well, it was a few minutes after that. Yeah. We really had the right trade in the end. We played it 100% wrong, right? Really, what I should have done is I should have held off, waited for the OPEC news to come out, tried to buy the dip somewhere in there, and had just taken one contract and had been willing to take on like $200 of risk on one contract. Is probably what I should have done, instead of like trying to take it with $50 of risk and all that. Like it was $50 was maybe reasonable. At points this week, but not during that. And I was just making bad decisions all around, and I think that I was a little bit blinded because I was I was trying to hit a home run, you know? I'm still not quite sure why I did it, but it's okay. We survive to trade another day. Probably, that money is just down the tube, but we learned something. I know. Okay, so we got about a minute. Okay, now the treasuries are starting to sell into it. That's what I thought would happen. And a little... Oh boy. Oh boy. They are really pulling for this one. My stop turned into a short right at the high of the spike. Oh, really? Jeez. Surprised the 10-year is still holding contracts on there. Okay. Okay, that was a terrible number. I was so dead wrong. Oh, man. Wow. Wow, how is it 220? What? What? Okay. You traded that? Really? I'm surprised. I'm very shocked. Well, what I did there was a gamble, and I think it's an okay one to take for me, but you're not go well. Yeah, $250 in just like one contract in ZB. Well, I think the play here is the 5-year right now. Yeah, the S&P 500 loves it. That's effing hilarious, man. Okay, well, for me, I think that it's best that I kind of sit here hands off and let them settle. Probably could have managed a better exit, but that's okay. Yeah, ES is gonna pump. You bet. That's gonna take us to 4,600 for sure. How can that number... Okay, so we gotta come here to Twitter. We gotta figure out what happened. How were they so far off? It was half what the expectations were. That is a lot of slack, man. Where did that come from? Well, man, it is just not my week. I thought that, at least I'll get this one trade here on non-farms. Nope. Dead wrong. And on one, I thought that, we'll probably come in pretty close. No, this number is bad. Well, it's okay. The expectation was 550. We got 220. So we created half as many jobs as the market expected. But the market has been concerned that the Federal Reserve is going to taper faster than that they're going to increase the pace of the taper. This particular news point decreases the chances of them increasing the pace of the taper, which is good for equities, and that's why they're buying. Pretty wild, right? Yeah, I could have halved my loss there. That's unfortunate. I joked earlier about, like, I think it's the drugs, But like I'm telling you, the Strattera that I'm on, which is kind of like an antidepressant, it does something to your emotions, and I cannot stay unhappy for long. Maybe this is what a normal person is like, but because before I would be like, oh, so distraught about something like that, Okay, so the 10-year is actually back to the open. So I'm going to on sim here. I'm gonna try building a long position. Now, there's been many times here where we've gotten a print in the where we've gotten a strange non-farms print, and the treasuries do like the opposite of what we expect, or like the initial move is what we expect, and then the rest of it they do the opposite. And they're kind of hinting that that's what they're gonna do. Look at that. How are they pushing into 25.5? Right? It's like somebody always comes in and makes like the crazy trade, let's call it. Your brain is overloaded with serotonin. No. It doesn't affect serotonin. What happens is I don't get enough norepinephrine. And so it inhibits the reuptake of norepinephrine. That's what it is. And that uptake of norepinephrine, it gives me better control over my emotions. Yeah. Well, so let's just confirm here. We did steepen. Okay, so if I got 3, that's tough. No, I thought we fixed that one live action. Let's go. What was it? What was it that they did last night? They like passed a stopgap funding bill or something like that. Yeah. I don't know if it was the debt limit. Yeah, I'm trying to find. It's funny enough, it's not the top. Okay. Yeah, government shutdown postponed for 11 weeks, says Hot Air. Oh, that's not the debt limit. I see. That's not the debt limit. That's the government funding bill. Included funding for a vaccine funding. That is actually funny to me. Well, this is a tough call now with the treasuries. Do we continue to move up all session now because of this? It is steepening. They steepened a lot. So far, after coming back to the opening price, they are marching forward. but already kind of settling here. I don't know. The 5 years not cooperating with me here either. By the way, did you notice that I was able to fit gold on here and oil on here? So now we've really got like everything. Oh, we'll put the dollar on here. The dollar got creamed. Let's clear things in the 5 year so that we can kind of keep track a little bit better. I should cancel that order. So I still... Well, one person on Twitter here pointing out that there has been significant revisions on these reports. That is a good point. Disappointing at job creation offset by sharp drop in the unemployment rate, an increase in labor force participation. Well, the flow that we're getting so far, I am seeing, well, look at that. Yeah, somebody sold the 5 year there. Look at that. There's a big iceberg there, though, so... Nobody really holding it down in there. Well, okay, that's a little better at 5. I'm definitely a little nervous here, just because I think that we should go higher, but the treasuries have defied and confused us so many times on non-farms lately, right? I would think that the 5-year would try and retrace back over that stuff that they just crossed there back up to '06, but you can see that like the volume isn't really coming right now. The 10-year may be coming back. Okay. And a good bid finally in there in the 5-year. Liquidity is still light. It's only been 15 minutes, actually. Also, this could be spreads. They could be flattening it out again. Okay, well, it's just kind of trade right here. So at least the trend has halted a little. S&P 500 definitely bought on that news, but it wasn't crazy. It wasn't too crazy. Oil was actually somewhat muted from the move. Look at that. Can you believe this? Well, that's it for me today. Man. Such odd action. Is it because that unemployment rate changed? Look at that. Well, I'm looking at the volume. This could. It's possible, at least, that this is just volume from the news equalizing out. But that is. Oh, by the way, this is. You need to pay attention here. This needs to be. This little sim trade needs to be done. back at this. So we'll come back here. The unemployment rate declined from 4.6 before to 4.2 with 4.5 expected, even though non-farm employment change was 210. Average hourly earnings was slightly less than expected spot 3 versus spot 4. Is that excessively hawkish? No. So one thing I'm noting is that the market makers are just jumping out of the way. Let's not demonize parade ramp. Oh my gosh, I read that story. That was so offensive. I don't know if that's something we should talk about on YouTube, but man, that was so offensive. I can't believe that guy. You know what, though? I really don't think that guy is in his right mind, you know? He's a little crazy. Look at it go. Can you believe? Can you believe? Well, you know what? My original position that I took on the open would still be going. I mean, would be good because I was long from 1 spot 225. Not as much as I had lost though. Come to daddy, says Uzi. I'm a little... Okay, so here's the thing. We're not below overnight lows yet in the 10-year. Not in the 30-year either. 131. Not in any of them. So there could still be some stops. Although for now, kind of looks like... Oh, maybe not. Saying they might have found a spot, but I'm not sure they did. Yeah, just barely touching 162 would be a good technical spot for a bounce. I'm not really seeing the signs in the flow though. Although given current conditions, because the condition that we're in is that liquidity is still relatively light, orders are pulling, and it's just kind of trending. So we might not get the same kinds of signs that we really like to see when we're like in a spot where they could turn, right? Yeah, okay. Interesting. Now the thing is that if the treasuries continue on this bender that they're doing, that's going to start hitting the equities, right? I guess equities are just a little bit above where they started this news. Well, definitely turning there. So right now we're about at short's average position from the overnight session. So they're kind of at a critical spot. Yeah, okay. Okay, what was that? Some sort of a crazy stop run there, man. Now, there wasn't a lot of actual volume behind that move. It was just like the market makers pulled it up 3 prices for no reason. I guess I shouldn't have that out there because could be just what we're seeing here in the dollar, right? Yeah. The 6J looks pointed down though. Yeah, and coming right back down. It's funny, I see that order at 2,200 contracts there, and I'm like, oh, there's a big order there. But then I'm like, oh no, wait, that's only like what they normally put up on the DOM, and it it pulled when they traded down to it too. Oh man, oh yeah, and they took most of the contracts that were there at 12.95. Well, man, with the way that it's doing this right now, can you imagine if the headline number had been good, how hard the treasuries would have sold? It's pretty stable right there. Okay. Dave says I don't know what to do with them. Yes. I don't either. Or frankly, oil. Oil has kind of been. Well, I mean, I suppose oil has been slightly bullish, but okay. So both oil and the S&P 500 reacted to that tick down or two from the treasuries, and they are okay. Yeah, they're kind of gearing up for a test of the lows again, with the 5-year leading the way as we steepen back up, or sorry, as we flatten back out. Okay. So a decent amount of volume down here now at 19. Iceberg offer 19.5. The big order trying to hold it down at 20. They kind of pulled. They're doing their thing here for sure. Easy down ticket 19 though. That could bury him. Okay. Well, let's reset it down to there. Seems like somebody wants to try and push it, but they're just not. They're taking their time. My eyes are kind of watering here. I think, like the 10-year is kind of sitting there like, yeah, we could go a little bit lower. But I think for us to get like another really strong leg lower, that we probably would need the 30 to come with them a little bit more. Which it is not quite doing. Yeah. I mean, that was a new low off of that move. It's not like low of the session, but low since non-farms. Should it be tanking down? Yes. Perhaps. They're kind of playing games with each other over here in the 10-year. So it looked really bullish there for a second, and now look, they're right back at the lows so easy. Wish my bot luck today. Yeah, we were talking yesterday on Discord, and he was having some problems with it. It had been working fine for a while, and then yesterday it just was like a disaster. Okay, oh, so we got Fed speakers, huh? Oh, how come they're not on my list? Well, Fed's Bullard is going to talk. I don't know why it's not on my list, but... Yeah. Okay, so Saha, I think what is going on here, and I could be wrong, the treasuries have done really weird things on non-farms lately, but the unemployment rate decreased. Last time it was 4.6, it is now 4.2. They were expecting 4.5. So that difference between the 4.5 and 4.2, and the unemployment rate has been the big thing holding the Federal Reserve back from tightening and so forth, right? So if the unemployment rate is getting better, then that would justify raising rates. And I believe that is why the market is reacting the way that it is. For now, though, there was an iceberg at 18.5, so that's why I think there was a little bit of a pullback there. Not the thing is that with the way that these tend to go on downsides, it might kind of do that and bounce there for a while and then just bloop, fall down almost like for no reason. You know, it can be really confusing order flow because it's just like it will just go. Or maybe that iceberg holds. We'll see. This time it's a little different because the 30-year is pushing down a little bit more now. Yeah, I don't think that the ES is worth trying to touch right now. The problem in the ES is that it seems like there's a lot of other things going on over there, right? Like the rates is definitely a thing that concerns them. The virus has been a thing, but there's also just like really excessive gamma out there, and the equity market in particular is extremely dysfunctional right now. So many people have bought puts. I feel we could see all-time highs again. Yeah, see Saha gets okay. So they just took 18.5 with only 300 orders. That's where the iceberg was before. So that's going to be a little discouraging to the bears. They're not hitting 18 yet. But that was what I kind of meant, where it's like they can take another step down, and it's almost like they just kind of fall into it, and it's not a lot of orders or anything. In place where they were holding before, there's nothing there. My heart's beating kind of hard right now. I'm thinking it's a little excited about this smashing 18.5 potentially. My sense here in Detroit area is that people are seriously going back to work. Seems like employers are less desperate than earlier this year. I don't know. One of the things is I'm actually seeing, all of the supply chain issues and stuff. I didn't necessarily see them in my daily life, and now I kind of am. Packages are taking forever, and I can see shortages at the stores and stuff like that. Certain products. Okay, wow. Whoa. Okay, that was not how it normally goes. Somebody just dumped like 4,000 contracts. If the liquidity had been higher, you would have seen that as a block sell. That was a puke. Oh man. And again, he's not done. Somebody's puking hard here, dude. We're like not even close to the levels that I would have expected to see something like that too. That was session lows though, right? Yeah. Well, all that said, they came back to the scene of the crime very quickly, didn't they? That was... I have not... I've seen pukes before, but not like that. And I think that, I think the only reason it happened like that is because liquidity is still relatively light. Somebody just bailed there on pretty light liquidity. That was something else. Now, the curve is steepening a little bit. You can see there the 5-year is a little bit higher. The 30-year was kind of more of a driver on that move down. But it was the 10-year that puked. Okay. Probably we're going to have to wait a little bit to see how this sorts out, just because the location they come back to it. It's not uncommon for them to come back to it and then just kind of fight around a little bit. And I have a hard time determining which way it's going to go after that. I suspect that we could go much, much lower just because we're so much higher. Like, we're so much higher than we were, like, Thanksgiving, right? In the Treasury. Like, we started this contract 129 in the 10-year, right? And if they're reading this non-farms as hawkish, like that's like the downside targets, right? And this move down here was really only the overnight lows. So that wasn't even necessarily a big deal. So if that's what they do on the overnight lows, can you imagine what they're going to do if this continues down? That could be the low of the day, though. I mean, I didn't expect this to move down anyways. This whole move has kind of taken me by surprise. Right? I got head faked both ways. I was long, and then I had to puke, and then I went short, and I had to puke that. Oh, you're both from Detroit? I didn't know that. Okay, the 5-year there kind of leading the way lower again. Oh, Biden's going to deliver remarks today? The top of the hour. Okay. I did not know. Well, I suppose we should just be grateful that he can give press conferences, right? It was the same with Donald Trump. Sometimes I kind of wondered with Donald Trump, like, they're really going to let him in front of the teleprompter? Well, they haven't really been cooperating with me. I've been looking to maybe take profits on a contract and then try and build back up or something. But it is just like not. The liquidity here in the treasury has just been awful, right? Like, I could put one right there. I could put an over there, but I don't think that they would actually fill it. Really, when they were like puking is when I should have gotten out. Now, some of this shuffling here looks like more spread trades coming in. I kind of think that somebody is flattening this again, which isn't helping us necessarily because they're taking it in the 5. Like the 5 is selling and the 30 is buying, and so since our 10 is a little bit more 30, we're not getting as much excursion as we would like in the rates. Well, I feel stressed out, man. Shouldn't be, but I feel stressed out. Watching this. Well, the E-mini opens up in 10 minutes. CL did well. Yeah, it did. Look, can you believe that we could have gotten, what was it, 63 yesterday? Fucking bullshit, man. Total, I had it all right and everything. I mean, the larger trade was right, but I had the OPEC part of it wrong. Had the OPEC part of it wrong. It's basically the gist of it. Now I don't know what to do. We could try, I've been thinking that we could go and try taking some options. I don't know how hard they're going to come back, though. Like, I feel like up to 70, that oil could come back to 70 pretty quick. But from 70 to 80, that might take a while. New variant is not. So a lot of desks, I shouldn't mention this again, but a lot of desks have been saying that the Omicron variant could it be positive for risk in the long run, because if a less severe variant becomes the dominant strain, then we don't have to worry about it as much. It's good for a less severe variant to take over, because then it becomes more like the flu. Well, there's a considerable amount of flattening happened through there, and it seems to be holding. I don't know if the 5-year will drag him down. There's a big order there in the 30-year trying to hold it, but that's probably part of the spread trade, right? I bet you that let's see how many contracts trade at 162.05. I'm going to bet you that he takes most of them, and it takes like 800, 900 to trade through it in CB. But it could still go lower just because those are buys from the spread trade. Or, you know, they could not trade into it. That could happen too. $69. Oh, you're talking about oil, yeah. $90, and you're talking about yes. Okay, a bit of an iceberg there at 18 in the 10-year. Five-year is really trying to drag him down. Look at that. Okay, well then you did it. Okay, so at 05 it was 677. So not quite as many as we thought, but it was a legit, at least some of it was legit orders, right? Because there's a large meta order coming through here, which is a flattening trade. Sell the 5, buy the 30. And they're losing money on the 30 side of the spread. So they want to get filled on the limit there. Well, okay. So the 5-year definitely dragged them down there, but it was temporary. Maybe they go further. Okay. Have to say, liquidity in the 5-year in particular is really bad right now. Look at that. That at between 31 and 33 quarters in the 5-year was probably a big guy stopping out, because that was like 600 contracts across two prices. Hello, Yosef. Yosef sent me a message that was like, I hope it wasn't me that was getting you into oil. No. Had nothing to do with. Actually, I was surprised that there was somebody in chat actually like touching it. And I was looking at what you were doing, and I was like, I don't know if what he's trying to do is going to work. But I probably should have thought, probably it's not going to work. What I'm doing is probably not going to work either. But I've thought about it, actually. So I've thought about it. And here's what I'm thinking. What we should have done. Okay? Just stick with me for a second. What if we just hold it? Right? Like it's down. We're down like $200 on the position. And we just hold it. Huh? It would have worked. It would have worked at that time. I'm just saying. It would have worked that time. Was that a new low? It was not a new low in the 10-year. Close though. With the way that this is driving, this could take another leg down, guys. So you had a puke. They rebalanced. And then it came back down to the low kind of on its own through a spread trade. Like, do you think that there's more stops below 16? And you can see the market makers really aren't really trying to hold liquidity through there either. Well, but that's the thing, Joseph, is like when I look back at it, I'm like, well, worst case scenario, I could have lost $500. That would have been less than I had actually lost, right? Like, it would have been better for me to have just held more risk. Like the mistake was taking a spread trade and trying to get a really, really good entry and let it run. That was the real mistake. Okay, so there's the open. Man. Okay, so the Fed speaker's saying something. I think that might be what's causing this. IMF is talking. Okay, so Fed's Bowler just said that the 4.2 unemployment rate is a good reason to remove Fed support. This is why the treasuries are selling. Gonna see if I can take advantage of this little pullback to maybe get on the better side of the spread. Here comes ES upticks. Yeah, they took 46 pretty easily. How high do you think they can go in ES, huh? 46.60 today? Why not? Oil snapped back. I don't know. You say it's too volatile, but were you in it yesterday? Yesterday. Oh, yesterday. Oh, it is. I think it's great to predict. I kind of feel like if you don't have a reason to think that it's going to go a certain direction, why are you touching it? If you don't have an edge, then your expectancy is negative. Ooh, the S&P did not like that. This sim trade in ES, I'm just going to hold it on, okay? Oh, yes, we got PMI here. Look at him go. So we're going to get services PMI, and then the ISM services PMI at the top of the hour. Okay, there they go. What do you think? 1.5 in the 10-year, maybe? Well, there's some covering there at 14.5. Come on, E-mini, give me a break. The dealers didn't want the pivotal 4600, maybe? There's almost always a little bit of a reflexive sell move. So it's hard to say as of yet if what we got there in the ES is a big deal or not. That it's happening at the same time as the rates are starting to get a little aggressive again could matter, though. I feel like being really aggressive here, but I don't know, like 26 would have been okay. 1.26 in the 5. They're like, well, you want it? We'll give it to you, Seth. No, I would have preferred 25.5. Well, how invested am I here? Okay. It might be another leg lower here in the 5-year. Oh, okay. Give me a little bit better. Cool. I think that was probably should have picked a different price. So I'll take 1 at 90. Cool. Wind date 190 is the average true range stop. So, yeah, probably you'll see a little bit of excursion down through that. Okay, and the treasuries turn back down hawkish again. That's funny. That's funny. Okay, well, we got PMI. We're expecting 57. That's in about 5 minutes. It might be a bigger chap. It might just be moving around randomly. I mean, given that we've got news coming out in 5 minutes and then the 15 minutes after that, I can't imagine that they're gearing up to make too big of a move before that, right? You like Friday dumps? Oh, I see. I think that the treasuries here are maybe reacting to the risk-off sentiment a little bit as they pulled back quite a bit there. Is CQG data feed already for supporting full depth with no? Saw a screenshot of a price ladder and quant that had all levels and it says it's running CQG. It depends on the instrument. And they were probably just showing an instrument that they're probably just showing oil. Like you can see here on oil, it lets me see like 50 levels or something like that. You can't tell exactly because I also have the show historical one on. But I think if you want everything, you still want to go rhythmic. Well, these treasuries are giving them pretty wide ranges. And S&P 500, it running into lows. It's not like crazy stuff yet. It's pretty bearish though. Oil is still doing good. They're at 69. They're going to be right back to 70. So mad. I am so fucking mad about oil. I am still mad about oil. Now that's interesting. The spreads have kind of chilled out here on this move, by the way, in the treasuries. They're all following each other fairly closely now. Soybeans? No, listen, I already made room for you guys on here to have gold and oil because people on in YouTube comments were requesting it. And now you want me to add soybeans? No, we're not doing that. We're not doing that. Is somebody trying to steepen things back up again now? Because now there's a bid showing up in the 5-year. That could be profit taking though on their spread trade. Well, they filled him. No worries, I always talk to myself. Okay, here comes the news. Okay. Slightly better than forecast. So take my last one there. And we shall take them off right there. Okay. So I would prefer that ES turn back to risk on, but we'll see. Like I said, I feel like oil is probably a better barometer right now. Wouldn't you say? I hope you don't argue with yourself or put yourself in timeout. Well, now that Gary's here, I was thinking though, like if we wanted to do the oil thing, maybe a better trade would have been like USO or one of those ETFs. But I don't know how much, like, those are kind of meant for day trading. And so between days, they don't necessarily perform the way that you want them to. So I don't know how that sorts out. But maybe we could have bought some call options in USO, I think it is. I was looking at it the other day. I was like, oh, actually, their options are pretty cheap. And it seems like there's potential for it to move a lot further than what they're pricing. But maybe the reason I think that is because it actually doesn't move as much on the way back up. Because of, the way that the ETF works. Well, hello, NASDAQ trader. How have you been? So ES started to look okay. And then they're still kind of not sure, I think. There's the treasuries turning back down again. Liquidity's still very, very poor in the 10-year and in all of them. Maybe it's because we still got that Fed speaker talking. Well, is ES going to go for the lows again? It's going to be awfully close. Bullard saying some more hawkish things. I predict a slight improvement in labor force participation. Well, I really miscalculated that in the 5 years. That came back way more than I thought it would. What kind of market data should I get to have all those levels? Well, if you're actually getting the level 2 feed, then you should get at least 10 levels. But a lot of them will just only give you top of the book, which basically just gives you what the best bid, best ask is. I don't even know if they even show you what the numbers are. Well, shoot. Not happy with my trade in the 5-year here. I'm not happy with any of this trading today, really. So what did that actually end up giving us? That sucked. Man, it's Friday, yeah. So with the way that just went in the treasuries, I think I'm done now. I had something. I'm surprised with the way that went that I didn't get more out of it. I'm also surprised that I lost as much as I did in the 5-year. Why am I sucking so bad, guys? I maybe I'm just taking on too much risk again. I don't know, man. I'm super frustrated because, it's kind of been like I'm just getting thrashed around. Which is to say, like, it's doing this, right? And I'm getting in like here, And it's like, what the fuck are you doing, Seth? Well, I was trying to make a call based on the overall interest rates. I think that some of this move was just people puking, right? And there's my let's put it right here if they make another new low. I don't know. Yeah, it's just there's a lot of volatility out here and it's making it really hard for me. I don't know what I want to do about it. Yeah, Gary has been kind of stopping by the last 2 or 3 days. Here comes my stop. Oh. There it is. Yeah. I really thought the 10-year was going to get back to 1.5, man. Not sure what to make of all of this. Today was very hard in bonds. Had my profit target hit twice, no fill, and then it went against me quickly. Yeah, right. I am absolutely flabbergasted that I guess I had only been long from like here, but I'm absolutely flabbergasted that it came all the way back. Now, part of it is the way that the spreads are moving. The spreads kind of. If I had taken the original trade in the 5-year, then I would have been really happy, but. And I knew that unemployment rate could be a big deal, but I didn't realize that it was going to make them head fake like that, you know? Need a timeout. I feel like I need a timeout, man. So since I don't want to just like sit here, we're going to try scalping in the ES, okay? Because the trades that I've been trying to do have just not been working out. And we've been getting some favorable excursions. So I'm wondering if I just need to, instead of trying to position trade these in this environment, I need to just go back to scalping. I was kind of going along with the trend. Like I knew why it was happening. I was kind of going along with it. It was working out. So it wasn't so much that, it was that I didn't get as much out of it as I wanted. In that one, that was like the short skull cover in the treasuries, like that move right once they got back above 18. That was okay, fine. Well, I should probably pull my target in. I'll let that one do. I'll let that one fill either way, rather. And then I'll try taking one where I scale. And yes, it was slower. Okay, there it was. Okay. Woo! That was way harder of a dump than I thought it would be. Oh, man. That spot probably wasn't too great either. Eh. Bears might want to try again. Well, they might. I don't know. Okay, so Treasury's pulled there. Or Den News. Again, we're looking 65 as the expected on non-manufacturing PMI. Oh, it's better than expected. Okay. Okay, and I'm not detecting any kind of changes in spreads here, but the treasuries did all start pointing down. Man, ES, see, the ranges in ES are just too wide for me to be doing this, right? Too hard to get fills, jeez. There we go. Well, treasuries are chopping around a lot, but they haven't actually moved all that much. So I'm getting some fills on like the first target, but not anything else in ES. Looks like oil came back a little bit there too. Well, these losses that I took today in the micros was kind of more of the risk that I should have been playing to begin with. So, I didn't play them very well, obviously, but I think I'm get back to like this market is just too volatile to do anything. Jeez, yeah, see. Okay, so let's try doing it this way. Which way do we want to go? We'll build a position long there. And the stop out. Okay, got 3. Yeah. Should be way down here. And then 1 is going to have to be at right there. Oh, actually not there. We're doing 10. Then it should be at like 7.5. And then the other one will be at like 70. Oh, treasuries fell down another basis point or 2. So when it comes and I don't get filled by 1 tick, I get awfully suspicious. Phil, the holiday shopping numbers come in low. Well, they had already come in low, right? I guess we'll see what they do the rest of the season, of course, but I'm just trying to sort out what when I was doing this scale out, was my second one at 2? Oh, I was doing 12 and 8. So then it should really be more like 6.5. Mm-hmm. Oh, they're gonna go down for a new low, maybe? Oh. Wow, it's trading pretty hard there in ES. Look at that. Like I can see the granularity. And I would maybe need to smooth things up a little bit. Well, how's our CPU doing? Half? Or what do you think? I changed the setting and it screwed everything up there, didn't it? What a day, yeah. Okay, well, let's try short now, huh? We'll try going short. That way, maybe the market will reverse. I was changing the update interval to see if I could, because it was, it was getting chunky. 10 a second wasn't enough. I thought they were bouncing there, but now it's like pretty a big bender, right? Who can say where it ends, though? Is there gamma at one of these levels? Maybe there's gamma at 45.50? And it looks like the treasuries came back even further. No, actually. Where was that one that I scratched? 475. Yeah, okay. Look at this. They're going to stop that out too. So 10 points isn't large enough either. Because that's only been 2 minutes. You think they didn't like the number? Yeah, for equities, there's not much good in there, is it? Because we didn't really create many new jobs, but the unemployment rate decreased, increasing the chances of tapering and higher interest rates. So for equities, the news was generally bad. They didn't really react too strongly off of the news either, though. So clearly, though, like the treasuries have turned risk off here for sure, right? When I got out, there was a bunch of shuffling around, and now they're going into risk premium mode. Experts didn't expect us to get to 4.2 unemployment until 2024. Really? That's what Joe Biden says on the Twitters. But Watchdown dumped it. Yeah, yes, that might be some. I mean, this downtrend is getting pretty persistent, isn't it? Well, the thing I'm just seeing with this market is just excessive volatility, Like the S&P in particular is exhibiting excessive volatility. If the jobs were positive inflation-wise, the Treasury would have been up at least 10 basis points on the 10-year. Yeah, well, I mean, they did rise a little bit, right? Like remember, we were at 2.3 one spot 225 in the 5-year, and we got all the way up to one spot 26. So the 5-year increased 4 basis points. If the top line number had been good, then they definitely would have gone, right? And the excursion that they had on the upside right after the news was bigger than this move down that we had. So, but you know what? The treasuries keep doing weird things on non-farms. Like, it's been now like 4 non-farms in a row where the number was surprising, but then the treasuries didn't necessarily... they didn't go one way, let's put it that way. Like, there'd be a move in line with what you'd expect right off the news, and then it would reverse. And that happened several times in the treasuries. So here's ES hanging out at like the so let's try and let's plan this out, because I'm thinking how should we do this? I'm going to get rid of this Fourier series analysis because I don't really pay attention to that anymore. I'm going to put on my ATR tick for, let's say, a 30-minute period. Hopefully that chart can handle that. It's not looking... Oh, okay. There we go. 22. It's only 22. Oh, for a minute. So really, we need like 60 ticks. Wow. Okay. Gee. You know what, though? I don't think this volatility is just going to go away next week either, because we're going to have, like, don't we have CPIs and stuff next week? Let me see. Bond auction, it's CPI on Friday. Nothing on Monday. I suppose that might not be too bad. So bad. It's Friday. It's a mess. Yeah. I would love to try taking another position in the micros. I really feel like I want to, but I think that was 3. I don't think I want to take more than 3 trades. Had to scratch the last one. Yeah, I just... See, the treasury, the ES is looking like that's like they're going to reverse to me now. The treasuries did chill out. Can the 10-year go to 1.3 or 1%? Oh man, that would be like... I think that to get to 1.3, that you would have to have the Omicron variant cause more economic damage than all past coronavirus waves. Like, I think it would really take something quite crazy to get even to 1.3, let alone 1. I mean, for it to get to 1, it would have to be like full-on economic crisis. I certainly don't see it going on with just like standard, like what our current economic predictions of the economy is, you know? Well, the ES didn't quite get to where I thought maybe I could try short. Also, we should keep an eye on this 50 area if they go back through it. The primary dealer surveys are thinking this way. What? That they won't get to 1.3? They don't ask that sort of question on those surveys, do they? Well, I don't know about that one. Okay. Wish that was a little bit closer to the low, maybe. Well, I'll go and look at every survey that I can see, but I haven't seen a survey from primary dealers lately, and it's usually not public information. You'd have to have a really significant change go on here to get 1.3 again, though. At this point, at least. I don't know. Treasuries at the moment. I guess there was some selling and spreading there. There was some change in the spreads. But other than that, the treasuries kind of look like they're trying to find balance and that they're not actively trading it so much anymore. Primary dealer survey from the Fed. Okay, November results. Okay, their range for the target federal funds rate. Oh, I looked over there at the MES and I was like, oh no, they've all again. Now it's just, and just fell back to where they were. Funds range. Unemployment rate. Net purchases of treasuries. PCE inflation. %, recession in 6 months, huh? Sure. They don't have anything for the 10-year rate in here, though, Gary. There's a lot of interesting ones in there. I wonder, though, when does this come out? So when I click here, results, distributed 10, 20, 25. So that would have been... Oh, that's just when they send the questions out. When does it get published? Or maybe there's an RSS feed? No. Well, no, it says that it happens every month. And did I get my fill? Cool. The next one should be at 67. Take a look at the September survey. Saying that in that one that they had something for the 10-year rate. Net purchases. Oh, here we go. Indicate the percent chance that you attach to the 10-year treasury yield falling in each of the following ranges. And that to year-end 2021, that it would fall to 1% was they had 6% that it would fall to that. Falling in each of the following ranges. I have a pretty broad range though, from 1 to 1.5, 30%, 1.5 to 2, 38%, 2 to 2.5, 16%. That's by the end of this year. But it is basically going to fall under 1.5 probably. And then by year end 2022, they think between 1.5 and 2, which sounds about right. That shows where the highest amount of them. Because it's not as specific as you were talking about for 1.3. But at the same time, even if, for instance, they were saying the majority of people said that we were going to be below 1.5, okay, I would have to say doesn't matter from September, because that was before the really big inflation print that got everybody Jimmy's and Russell, right? So that, if that had been in the latest survey, I'm going to bet you that way more people would be over here on this above 1.5% now than there was before. Anyways, the thing I'm trying to figure out is, okay, so like the December questions have been sent out. Please respond by Monday, December 6th. Well, we're just going to have to bookmark this page. Oh, are you for real? Still coming back there, huh? Well, I'm trying to run the range, but I'm like super tempted to take one off there. And then did it get put in the... I'm going to have to manage my bookmarks here. Folder of finance. Okay. Survey of primary dealers. Probably need to simplify this down a little bit. How do I add a folder? Reports. Now I would do research. We'll call it research. Research. And then I want this one. And this one. I've been trying to create a list of like regularly research reports like this and like when they come out. And I have found it extremely difficult to sort out when they happen. Yeah. It is definitely, I'm glad, happy you shared this with us. I would love to have more reports like this. It's the sort of stuff I want to read. Oh, did it take me? Oh, okay. Oh, no, wait, what? Well, I'm confused. I think it must have already hit a stop. Took some on and then stopped out, maybe? Yeah. I don't know. NQ looks like it's going to puke again. Yeah. I certainly don't want to be long anymore. We'll just close it. By the way, this like 130.25 half area or so, that was like where the previous low of the year was, and they have come back here a lot in the treasury. Academia is only concerned with publishing the article, not about the veracity of what they are saying. So here's the thing with the research is like, you come here to like the quantitative finance section. Current month. Optimal incentives in a limit order book and SPE control approach. That is something that we should look at. Actually, I think that we want to go not to current month. I think we just want to go to new. Yeah. Oh, there's a lot less than there was earlier in the month. Anyways, okay, let's see this abstract. With the fragmentation of electronic markets, exchanges are now competing in order to attract trading activity on their platform. Consequently, they develop several regulatory tools to control liquidity provision, consumption on their liquidity pool. In this paper, we study the problem of an exchange using incentives in order to increase market liquidity. We model the limit order book as the solution of a stochastic partial difference equation. The incentives proposed to the market participants are functions of time and distance of their limit order to the mid price. We formulate the control problem of the exchange who wishes to modify the shape of the order book by increasing the volume at specific limits. Due to the particular nature of the SPDE control problem, we are able to characterize the solution with classic Freeman-Cack representation theorem. Moreover, when studying the asymptotic behavior of the solution, a specific penalty function enables the exchanges to obtain closed-form incentives at each limit of the order book. We study numerically the form of the incentives and their impact on the shape of the order book. So this would be like worth reading. It's probably not directly applicable to us, but definitely is worth reading. And who is it? Bastian? I don't know these two guys. Anyways, a lot of it is just like, okay, sounds interesting, but it's not like big deal, right? But then some of them are like, oh my gosh, what? This changes everything. So I think you got to read the research, especially in this. Just go to the quantitative finance section of arxiv.org. That's what you want to do. Oh, can I just browse the whole quantitative finance? Yeah, there we go. Forex trading volatility prediction using, okay, now that would be interesting. And there's some replacements and stuff. This one I wrote down when it happened, actually. Where is this? Well, oh my God. I think it happens like, they can happen every day starting on Sunday night. In this paper, we investigate the problem of predicting the future volatility of Forex currency pairs. Just predicting future volatility, We show step by step how to construct a deep learning network. The numerical results show that the multi-scale long short-term memory model with the input of multi-currency pairs consistently achieves the state-of-the-art accuracy compared with both the conventional baselines, i.e. autoregressive and Garch model and the other deep learning models. Okay, but it's all volatility forecast, so that's I'm glad I stopped by today. Good info. What did... Oh, yeah, we get good stuff. That the Fed survey, I don't know. This one is kind of one where it's like, on the Fed survey, I would hope that I should be able to guess where people are going to lie on most of those metrics. But I don't watch all of those metrics as closely. But given the ones that they did, I probably would have said more would say that would be above 1.5 than below. So, as it is right now, we're probably very likely to be like right on it by the end of the year, don't you think? Well, actually, probably a little bit below it, right? So I guess the people in the survey are going to be wrong. Well, the Fed does have a survey. Or sorry, a Twitter. What the hell am I saying? And you know what? Like, I took these trades. It didn't do very well. I'm kind of sitting here like, well, I took a risk and it didn't work out. But now I'm sitting here like, is there something wrong with me this week? Because I keep making mistakes in what I'm saying. And why do you need to publish a successful model to make it less successful because other people are trading it with you? Well, so that's not how it works. What you do is you get a PhD and you go and you write a research paper and you say, hey, we made this research that is better able to predict future volatility in this market. And then all of the guys at the banks are reading these, all right? And they go and they say, oh, hey, this guy, he's a PhD and he published a really good paper. We would love for him to work for us, right? And that's basically how you get into Renaissance, right? That's how you get hired to be in Renaissance, right? Is you publish a paper and it's really good. And the thing is, you don't maybe give everything, right? Maybe there's something you took it even a step even deeper, and you know something that could really, really be useful, but you didn't publish that part, right? And then you go to a firm and you incorporate it. Because I'm told that to get hired at like Renaissance as a quant, that you basically have to be a PhD at this point. So, yeah, that's why you do it. And there is, especially in the market microstructure and trading category, I really feel that there is some really good groundbreaking research that has been happening recently. And they're learning things that I really think would change a lot of retail traders' approaches to markets. Oh my gosh, was I long 50? Oh, the ranges in this day are just so wild. Well, let's take one on a low. Okay. But let's try to take profits a little bit more consistently, because it is just all over the place today. Like this in the S&P 500. I don't really feel like that this move is happening because of the non-farms. Do you? Yeah, not necessarily a PhD in finance. Maybe a PhD in mathematical finance, right? Okay, so there's one. Bullard is still talking? Come on. Come on. There we go. Hmm. And they don't recruit people that already know how to make money. They recruit people that are well accomplished in physics or math and then build them up. Yeah. I think that the thing that matters more is that the kind of math that they're using at those places these days is really extremely sophisticated, and it really requires somebody that knows what they're talking about. And I'm certainly not one of them. Yeah, I do not understand statistics on that kind of level like some of these people do. Oh, did I get both of those filled? Really good job. Well, life is a lot easier if you just go short today, huh? Why would you want to work with a firm if you can make money on your own? Yeah. I'm sure there's lots of ways in. I just like it seems to me like you come and you're a retail trader and you scalp futures that nobody is going to come and look at you and hire you. I don't think that is worth anything to anybody for some reason. Like, I feel like I know some things that are valuable. Maybe programming with those things might have some benefit, but probably nobody in Utah that's going to want to hire that. So it's really just kind of this really frustrating thing. It's like basically you have to put a ton of effort into learning how to trade as a retail trader, and there's really nothing to fall back on or anything like that. Is you just you either succeed or fail, most likely on your own. And if you don't do well, or maybe you do okay, but you just in the end you decide that it's not worth it, then is there like some fallback? Seems like no. Seems like you're just out all that time, and you know all of this really sophisticated stuff that you're never going to make use of. That's kind of my frustration right now. mean, I can I make these indicators and I can, let other people use my indicators. But then, the whole problem is still that it's like, I can give you a lot of really useful stuff. A lot of stuff that I can prove helps or can prove matters at least. And you're probably still going to lose money. It's kind of a real racket, don't you think? Why would you need a fallback? Well, I mean, like, why learn all of this stuff about statistics and so forth if you're never going to gain any benefit from it? I may as well just sit around and watch TV. Well, they made another new low, but they didn't quite touch 20. And the bounces are pretty excessive once again. Okay, I trust you, Gary. That's cool. There you go. You should just post them in Discord, but that's okay. Don't learn things you think you don't need. Well, but I do want to become. That's the thing. But the point of that was this. It's all or nothing on the trade. Either you learn a ton of stuff and that stuff ends up helping you and you become a successful trader, or you don't become a successful trader and everything that you learned was for naught. That's what it seems to me. Index arbitration, index insight, and market timing tools. Ooh, they have market timing tools? This is quite useful information. I don't think that I could use them, but they're basically saying here's where you should buy and sell spiders and stuff based on what the S&P 500 is. Oh, sorry, I should pull it over here. Did my 20 get filled? Oh, hell yeah. Okay, cool. I tell you what, man, the volatility here really is excessive. It's like 10-point range in a minute. It's really insane. Look at the thresholds for if, as you're talking about this right here, right? Oh, wait. Cell programs thresholds. I'm not sure I understand what that means, though. Is that like if it moves more than 8 points that programs will come in and start pushing it? Click on the red dots, these red dots on the side. Look, there's a yield curve one. Those are just the short-term ones. Oh, what do these terms and numbers mean? A sell program is a simultaneous short sell of all the stocks in the index and the purchase of the index futures contract. Therefore, the stocks comprising the index should decline and correspondingly the index futures should rise, producing the effect of a stock market decline and futures market rise. Two significant values in the sell program range are sell active and sell threshold values. Sell active, this is the future spot index premium value at which sell programs should be prevalent, producing a meaningful decline in the stock market. Okay. This is the minimal future spot index premium value at which the sell programs might be initiated. Oh, okay. So, but that is in points from fair value, right? Oh, the fair value premium. Is it saying that the actual index and the futures can be off by 8 points though? They can't be saying that, are they? Yes, yeah. I've asked too many questions. Let's start over, Gary. Is it saying that the S&P 500 and the futures can be off 8 points? Problem is I don't really have a very good feed to the actual index. We can't calculate that number of fair value. Oh, well, I think what they're saying is you go and you do all of the calculations on all of the individual stocks to determine what the index is. And then if the futures are off of that by more than 8 points, then they will actively start to sell stuff. Something like that. I'm just shocked that they can be that far off. If the thresholds are met. I don't know if but then the thing with this is that I think you build a program to do it, right? And it's kind of like, well, I'll bookmark this and put it in my finance thing. It's not 100%, it's a number to be aware of. Well, yeah. I mean, the whole thing is like, can we sit down and say if the S&P moves more than 8 points that we should be thinking that there's going to be some changes? There might be a threshold to look at. Program trading calculator. Yeah, this is like statistical arbitrage on the index itself. Oh, sure. But we could we could plug the numbers in. I guess what I'm saying is if that was the kind of trade that I was going for, I don't think that I would want to be placing the orders by hand. I think that I would want to come in, I would look at what these numbers are and then go and input that into my robot. And then my robot would say, if it ever gets beyond this, then do something. And or try and pull something like ourselves, right? It also kind of makes me wonder, because I don't really have a very good calculation of the index, right? But what if we made a similar calculation for the difference between the S&P and the NASDAQ? Now that one's a little fraught because they can diverge pretty widely, but it might still be useful. Well, the S&P 500 has been chilling down here for a while. You think they're going to go for another step? Maybe back to 4,500? Oh, no, that would be lower than yesterday's low. Wait a second. How far? 4,500 was where support was. Now, I probably don't want to try and... We'll take some profits in here, okay? In fact, why not just take it all off? It's time for me to go. You can send me... I don't know if I want to do arbitrage, though, Gary. That's the thing. I don't know. I don't know what I want to do. I feel like I should change something, but I don't know if that's the sort of thing that I want to do. We'll take a look. That's like... I think that there's a lot of other stuff that I need to learn and start thinking about first before I do something like that. Because I've gone in and started looking at like statistical arbitrage type systems, and I've always been like, wow, this is like way beyond my understanding of math right now. Okay, guys, I will see you next week, and hopefully things are better for us in the meantime.